Hello YouTube. So tonight's topic that I'm sharing with you all is what should you know before you start trading as a new trader. So before we start into it, this is a disclaimer. This content is for educational and informational purposes only, and that the strategies shared here are my personal experience and should not be considered any financial advice. There are no guarantees of future profits, and all trading decisions are made at your own risk. Any platform, tools, or brokers mentioned are for references only and do not constitute endorsement. Please adhere to the guidelines when participating in any live stream or video sessions that I might make. So there's a copyright notice down there. So that's the disclaimer. Understand the risk that you are going to face when you start trading. And let's go into the chart. So this is a chart of Reliance Industry Limited. This is a stock in India. So let's see. If you notice that I have changed the background of this chart to black, and then the uptrend will be in green and downtrend will be in red, just like the ones used in the Western Hemisphere. So okay, before we start, do you know that what is most important in trading is not about making profit? Profit will come eventually if you are doing things right. If you keep on losing money and keep on losing everything that you have every time you trade, or maybe not every time, maybe you can make a once or twice a lucky hit and then you lose everything again. Perhaps you should know that before you enter a trade, always know the risk that you are taking. Just like when you plan to enter, let's say here, this is Reliance Industries. After the strong downtrend all the way up down to the 200-day EMA, this is a 200-day EMA. So when it's reached here, and you can see a lot of candles here converging there with the wicks up and down. So these kind of candles means indecision. Before you try to enter here, know how much are you going to risk here. We'll set a stop loss somewhere maybe down here a little bit. So even if it really touches here, then you just exit the trade. Do not hold anything if you enter here, and then if it goes down all the way down, let's say you enter somewhere around here. Okay, you set your stop loss here and you think, oh, okay, I will exit here. But then when the price really comes down here, there will be a voice telling you that it will continue go back up. Right now it's just a temporary glitch down, and then it will go back all the way up here, and then you will make money. It might happen, but then most probably it will not. So if you buy here, and then if you look at the price and it drops down below this price, so you should sell actually, because this is a kind of a risky move. If you continue hold and you think, oh, okay, it will be going up, so I average down again, average the price by buying more. So when it goes down again and again, you keep on buying and buying all the way down until the stock crashes all the way down to maybe zero or something like that. So you won't be able to withstand the immense pressure going downwards, and you're holding a losing position for so long. As a professional trader, I can say for myself, the first thing that we have to make sure we take care of is our own risk. Before the profit will come eventually, just the risk, you have to manage your risk. Keep your losses small, just like here. Your possible loss is this much only, but then if it works, it might go back all the way up here, and you will make all the profits all come back again. So when you touches here, or maybe if you are lucky, you'll go back all the way up here. So we won't know, because the market is just very dynamic. It will move and change every time someone or some event happens. So when it's here, this position, it consolidates above the 200-day EMA. So it is a positive move because the downward pressure down all the way down here, but then it stopped here. Is not is still deciding where to go. So if you take a position and hope for the best, you go back up. Possibly it may. So we won't know. So keep your loss tight somewhere here. If it just break down, just take the loss, sell it, everything, and then it might continue upwards. I've tried it many times. After you sell everything and you just continue upwards, well, it's part of the game of trading. So if you think that you can't withstand this kind of pressure, I don't think trading is suitable for you. It may take a few years time for you to really master the art of trading, especially the one that you need to maintain your risk low. So this is one of the most important thing. In fact, before you start any trading, know the risk that you are taking. Then another thing is, where should you enter? This is a very important thing. And where should you exit? So most people will think, oh, okay, I'll try to buy low. So if your stock is going low and low and low, you won't know where to buy actually. So you can see this Reliance stock is very strong since all the way to 2017 all the way to now. Even the COVID problem is just a blip to it. It touches the 200-day EMA, bounce all the way up very strongly. So it's not really on a downtrend. Since okay, this is something new. So if you see here, Reliance Industries, it has touched here in 200-day EMA once, and then it continues all the way up here, and then it touches here again. So this gives us information that it touches this 200 EMA twice. So the first time it touches here, if you look at this one, okay, now I'm doing analysis again. Yeah, I should concentrate on the education part first. So never mind, we'll just a short explanation. If you look at here, it touches this 200 EMA and bounce very strongly upwards. This is during COVID when the lockdown happens. So okay, all the way here, it goes down, almost touches the 200-day EMA. The 200-day EMA actually flattens out, and this you can see here, it takes many weeks, for maybe a few months, it still haven't have a rebound yet. So this kind of show that in the long term, this could be a danger level, because the previous time it touches here, it's sort of like an immediate bounce upwards. Now it touches here, but there's no bounce yet. For few months, there's no bounce. It's still undecided whether to go up or down. So this might tell us something that the stock might break down. So just be careful if you really are trading this Reliance Industries. And this is a weekly chart, by the way. So weekly chart will take quite a few months to play it out, or weeks. So okay, entry level. All you need to do is find an important, in my opinion, get yourself a indicator first. Indicator means one tool that you can use to trade, to reliably tell you whether the trend is going up or down or on the sideways. So I think the best one so far, I've tested quite a lot. Even those machine learning or those things that you can find here in the trading view. So in my opinion, keep everything simple as possible, just like this one. You can see the chart is very clean, simple. Keep it very clean like that. So I use the 200-day EMA only, and this one, this I seldom really use this one actually. This is just to keep my position running, just like trading stops only. That's all. So mostly I use the 200-day EMA. How do I use it? It's simple. Anything that is above the 200-day EMA is considered bullish. but doesn't mean bullish you can buy anywhere above the 200 EMA. Although if you buy somewhere here on the top and you sell it here, you're still making money. But then imagine sitting here for the past few months during COVID, 3 months, 4 months, waiting for the rebound. Oh, I think not many people can do it. So always think that is above the 200 EMA is bullish, but then buy only when the pullback ends. When the pullback ends, the momentum slows down and you try to enter, and then wait for a few weeks or months and try to profit out of it. That is if you're trading on the weekly chart, but mostly weekly chart is used for the overall trend. So we use the weekly chart to determine the longer term trend. Just like if I want to trade, if I'm trying to enter here, I know that the momentum is slowing here. So, and I saw the green candle starts appearing. So I want to enter somewhere here. I'll go down a step to the, where's this one just now? Okay, this one is somewhere November 2023. So we'll just go back November 2023. Oh, that's a long time ago. March, no, June, July, August, September, October, November. Okay, somewhere around here. When the daily chart, when it bounced above the 200-day EMA, so we'll try to enter like a trend line break or something. If you are using trend line, which I'll teach next time, so a trend line will be like this, and then you break the trend line and you just enter. Trend line is very useful tool also. Very useful, in fact. So this trend line, once it breaks and it breaks above the 200 EMA, I'll most probably enter somewhere here. Then I'll trace it all the way up. I don't really will use the weekly chart for the trading, in fact, unless I'm holding for a longer position. Where is it? Okay, if I really use the 200 EMA, I mean the weekly chart from here all the way, I hold all the way until the first red candle appears. It's like a few hundred points, 300 plus points. So this is a rupee, I think. Yeah, rupee. This is India stock. So okay, so if I were to trade daily chart, I'll most probably enter here, and then I'll wait all the way up here, because another trick is whenever we see a stock that has overshot quite a lot from the 200-day EMA, expect a major pullback. So when do we expect a major pullback? You can wait for a signal like this, double top, then just sell it somewhere here, or you can just sell it when there's a like this. I'll most probably exit somewhere here when there's a stronger red candles, either this one or this one. I'll most probably sell in January. So there's about 2 months time from 1184 or somewhere around this plus minus all the way to about 1375, or maybe lower range with the lower range 1350, somewhere around here. So there's quite a lot good profit here. Then if you are really into trading the lower time frames, like the 30 minutes or 1 hourly, yeah, you can do this the same thing also. Just make sure that the trend is still up on the main trend, like this kind. This is for weekly. I'll use daily, just one notch below. So if you are trading a 15-minute chart, so make sure your main trend is about what, hourly or daily also. You can choose either one. So if daily is going up, so any pullback in the 15-minute chart, you can just buy when there's a opportunity comes in, and then you can just sell it when it goes up. So there is no right or wrong in trading. Just the any way that you can make money is a good way, but keep the losses small. let the profits run. That is how the game is played. So you need to know, this is one of the main thing in trading. What else? There are so many things that I can talk about. The support resistance area, like this is a support resistance area here. So you can see here all these things, support resistance area. Whenever it breaks out, then fails, then breaks out again. This is a very good chart. Then here you can sort of like having a position, undecided position. Every time it hits here, it'll just bounce back. So because trend line or even this support resistance are not really a line, actually it's more like an area. uh, this kind of position like this is very good profit area. Actually you can bet on the way down or up, but right now it's indecisive for quite a long time. Like I said, previously it touched here and then immediate rebound. Now it touched here, it waited for quite a long time. So there might be something wrong that it will drop down, maybe, but we won't know. So let's see the daily. Okay, daily chart shows that it's already in negative territory. It hits this 200-day EMA. Most probably it will just hit here and then goes back down. If it breaks the lower low and creates a new lower low, it's going to go down further, but for now it's going down. In fact, it should touch the 200 EMA and crash down. This is Reliance Industries, so this is not a buy call or anything or a sell call. Just be aware that if you're entering this one, keep your risk low. Someone's shooting those fireworks here. Okay, what else? Make sure you get a broker that is reliable during market crashes. So when you want to exit or enter, you can do it easily. Sometimes brokers will prioritize those bigger clients first before you. So make sure you get those kind of better brokers. Okay, what else do we need to talk about? So that's about it, I guess. I'll upload this video and we'll try to make another one soon, talking about the support and resistance area. There's quite a lot of things to talk about, so I can't cram everything into one single video. So just subscribe to my channel, give me likes and maybe even comments, and then there's a lot of video that I already made. Hopefully everyone learns something from it. Okay, thank you very much and have a nice weekend. Good evening, everyone. Okay, let's start this one. So we are going to start with trading for beginners. So how do you make money in the stock market or futures market, or do you want to invest or are you going to trade? So this is the starting point for it, and if you are interested in this one, please follow, like and subscribe, and click on the bell button so that you can get any updates from me. So let's start. So this is an art, and this is CIS Watanabe. That's my icon here. I won't be posting any Lamborghinis or whatever, a big mansion or whatever, things like that. Just keep things simple. I'll just be using this icon as myself. So I wish to stay anonymous, and yeah. So this face here is from the original CIS in Japan. So if you have any interest to know who is CIS, you can Google it, and or you can find about him in YouTube. He's a very good trader in Japan, so you can start learning about him there. So let's see now. This is the trading for beginners, so you can hopefully learn something about this one. So let's remove this one from view. Okay. This is Dow Jones Index futures, the index, not the futures. So before you start in any kind of a monetary trade or anything, this is a disclaimer. Any investment or trade that you take on is a risk. There is a risk to that. So be aware of what you are doing. You can face financial ruin or anything if you trade excessively dangerously. So let's start. Here you can see this is trading view. You don't really have to get an expensive chart or anything. You don't even have to subscribe to it. Just use the basic one. I'm using the basic one as well. So there will be ads popping up once in a while. There's no stopping it unless you pay them money. So yeah, before you start, uh, do you plan to invest or do you plan to trade? There's a very big difference there. When you make investment, when you invest is about looking at the value of the company. Like you look through their financial balance sheets and everything, make sure that they are making money. But of course, those doesn't really show you whether it is a good thing to invest in it. Making money just because of a few papers telling you that they are making money, for me, not really. I prefer to make it to trade instead of invest. Trade, we can see from the charts here, is very transparent. We can see even if they try to manipulate the charts, we can see through the momentum from the volume and everything. But of course, I don't even use you don't even use the volume anymore. I only use the 200-day EMA and also a 9-day EMA to trail this the charts here, just to make sure I got it right. Okay, so if you plan to invest, there's actually a way to make investment using the charts as well, which I will teach in the future if I get enough likes and subscribes. So, okay, do you know that in TradingView, there's a paper trading here? This paper trading, I think you can try this one before you use any money in the real stock market. You can just click on it, and then the paper trading by TradingView will come out. Then your account. This is I used to be using number 9 as my YouTube is number 9, but then I realized that number 9 sounds like some kind of droid name like R2D2 or C3PO. Number 9 is just like another droid name. So I think I want to change to something else. And then I realized, oh, there's a very good trader in Japan, and his name is CIS, BNF and CIS, then Testa. All these are very, very good traders. So mine is mostly based on CIS trading. So I just rename myself as CIS and then Watanabe. So this account is still using my old number 9. So it's based on USD, US dollar. And you see the account balance as well. Account balance, in this case, you start at 100,000 if I'm not mistaken. 100,000, and then from then on you just play around with the trading. Just click on the trade button here, and then you can place an order. It doesn't cost any money because this is paper trading, so you can just play around where you think you're going to enter, where you think you're going to exit. And I try to use my existing method, the one before I use CIS method. So from 100,000, I sort of like lost about until 70,000. And then from then on, I try to use his method, and then my paper trading account has ballooned from all the way up to, I think this is trillion, 1 trillion and 144 billion 798,470. Oh, this is thousand. So I'm not sure this amount is how much already now. 473,000 is here. So this is million, 10 of million, 100 of million, billion, 10 of billion, 100 of billion, 1 trillion. So this is a 1 trillion. So I'm not sure if there's anyone as crazy as me doing all this paper trading until 1 trillion, $1 trillion in account balance and equity. The funds you can see here, the funds here is about 1 trillion. So you can trade using this one to start with. So all you have to do is build yourself a strategy. What is a strategy? It's like whenever you open a trade, you need to have some kind of entry, then an exit, a cut loss. So you can base your strategy based on trend following, like this one. You can enter. Okay, we close this one. You can see 1 trillion is. I'm not sure if there's anyone as crazy to make until 1 trillion here paper trading. So after that, I started trading my own account, and I'm quite successful doing it. So okay, let's close this one. So like I said, when you create some kind of strategy, you need a strategy to trade the market. Actually, any strategy will do, but most of it, from my knowledge, you sort of like the best strategy is trend following, in my opinion. Whenever, just like here, you can see, here is a previous high. So when the momentum, the stock price is going up all the way up here, and you sort of like have a double top. This is a so-called double top here. And then when the momentum starts dying down and going down here, you can sort of like short sell the market. Is the complete opposite of buying. You are selling the market. Means you borrow some shares and sell the market. So when you close out the account, you buy back the shares to return it back to the brokerage where you borrow it. It's very automated, so it's quite easy actually. So you sort of like enter here and then watch it slowly goes down. As long as there's a small red candle here, but I won't be exiting just because there's a red candle. I'll most probably be exiting when there's a strong red candle. So these two is not really that dangerous to me. If I take the trade here, I'll most probably be waiting here, coming down all the way here, because this is the 200-day EMA. When it sort of like nears the 200-day EMA, it is the called mean. When it nears the mean, it's most likely for a rebound somewhere about here. So I'll be waiting for rebound whenever there's a strong trend breaking down, and then loss of momentum here, as you can see. When the momentum slows down here, there's very high chance that it will bounce all the way back up to this level somewhere here. Oops. This level, as you can see here, there's a lot of candles, small candles here. Here, dilly-dally, trying to figure out whether it's going up or down. So this is some kind of a support resistance area. So whenever there's a chance that it will bounce, it's most likely be trapped in this zone here. So if you look at my shorts, I explained something about the moving average, but because shorts is just about 1 minute long, so it'll be quite a rush, but you can check it out. So you just okay, a little bit on the moving average. Moving average, I only used the 200-day EMA. It's more than enough actually. So it's just like Dow Jones right now. Okay. 200 EMA is down here. It has shot up quite a lot, far from the 200-day EMA. It is bound to have some kind of large movement downwards. So it can be like this all the way drop down here to this area. This is a support area, support resistant area. So you can just wobble around somewhere here, 39,000 level plus minus. We won't know because the market is very dynamic. It just changes every day, and there's a lot to learn from this one. This is the, as you can see here, is considered a double top, I think. Considered because as you can see here, this there's a lot of wick here. These two, you can see. Okay, they lost quite of support here because this one, as you can see here, the pullback, and then it tries to go back up all the way here, but it fails to break through. Instead, this sort of like created a lower high. So then there's a loss of momentum, and then these big candles here. This is a weekly chart, so it's most likely to be pulling backwards down here. Oh yeah, before I forget, remember in any trades, before you do, always look at a weekly chart. You can say, oh, I'm trying to day trade or anything. If you're a beginner, don't try day trading. Yeah, I know some of the other content creators will be telling that, oh, you can learn day trade in so and so time. Yeah, you can, but it's kind of dangerous in my opinion. You have to be really careful because the shorter time frame, the more volatility it will be. Just like here, you can see it's very clean chart. This is a weekly chart. It'll take some time for it to grow, to play itself out. Just like here, it's coming down on the weekly chart. So you can look at the daily chart. As you can see, daily chart shows that it's gonna rebound soon. Here, sort of like a losing momentum kind of play, slightly break down from the 200-day EMA. It might be a little bounce up here, then lose strength, and then continue downwards. Who knows? It might be. So we are playing with this kind because, as you can see here, we already analyzed the weekly chart. It's coming down actually. See the candles? So it's at a support here. If it breaks the support, it's most likely to come down. So are we going to enter here on a long buy? Are you going to buy here? I don't think so. The risk is quite high because, as you can see, this is a support and resistance area somewhere here. So even if you buy here, it can just go up here, stop a few while, and then breaks down. If it breaks down, it is very, very dangerous. Your risk reward is very low. Just like here, you're risking, maybe you have a stop loss, I don't know. A stop loss will be nice here, but then you're risking, if it suddenly crash down, your stop loss might be hunted down very fast, but then you're only gaining this much. It's not a lot of points to gain here. So I don't recommend this. We are trying to catch the trend, the big kind, just like this kind. Oh, the big kind. See the big one, like here, all the way up here. This is somewhere around 42,000 level, all the way up to 45,000. So around here, this 3,000 point move in just a few weeks. So as you can see here, the move downwards here is very, very strong actually. See all the big candles here. So the momentum is here. This is a temporary stop in my opinion. It should be a bounce and then come back down. So this is a no-go. So let's check out the Nifty. The Nifty. Let's check the weekly. Always check the weekly chart first. So as you can see here, the uptrend from November 2023 all the way up here, and then pullback, very strong pullback, because it has overshot. You see, it has overshot the 200 EMA by quite a lot. So this one, it will be coming here and then take some support and then break down again. This is a very strong support area, you can see here. So it's going to take a little bit rebound all the way up here to about 24,000 level, but fail to break through and then continue downwards to touch this one, the 200 EMA. So when it's going down, don't try not to buy, try to sell instead. So we're going to check the daily chart. As you can see, it has gone down below this 200-day EMA. Okay. So it will be this rebound, as you can see here. It will go up here and retouch this one. Check out my first video. I did touch on about this one. So it will be coming here, maybe retest here, then come back down. As you can see, this is also a support area, support turn resistant area. So it will be somewhere around here. So it will be touching here, maybe consolidate a bit, then lose strength and then crash down again, because the main trend is still going downwards. There's no upward trend yet. As you can see, why do I say it's not an uptrend? As you can see here, is the green candles are here and then here all the way down. We are not going to see much changes to these dynamics. My guess, it might be coming back to this to test this 200 EMA weekly. This is a weekly, maybe 20-ish thousand somewhere, but we'll just see how it goes, because so far it has been quite a long time. About the pandemic era, it only touches this 200 EMA, 200 week EMA during the pandemic, the starting of the pandemic, somewhere there. So it has been on an uptrend since then. Yes, there's a lot of pullbacks, but then because, as I said in my previous shots, anything that is as long as it is above the 200 EMA, it is a positive, considered bullish. So it's a bullish move upwards here, even though there's a short pullbacks scale. As you can see here, pullbacks here. It's not really that. It's quite a long pullback actually, not really short. Considering here is November 2021 all the way down to July 2022, is about half a year pullback, and then it continues upwards and then another big pullback here. This one should be shorter, about December to April, also about 4 or 5 months. So from here onwards is going upwards here. As you can see, there's only a small pullback here, not much, just a small consolidation here, and it goes up here. There's no pullback since somewhere in May, in 2023 May, all the way to October in 2024. That's where the politicians sort of like introduce some kind of a capital gain tax increase or something, which kills the market actually. Then as you can see, there's a big pullback here. So it's still above the 200-day EMA, but not sure whether it can hold or not. It's most likely to retouch this one. I'm sure it should be retouching this one soon, but we'll see. There should be a rebound here actually, a rebound, then come back down again. So it's like a wave. So if you're starting as a new trader, Always look at the weekly chart. It's sort of like a very smooth, as you can see the charts here. I prefer to use Heiken Ashi. Heiken Ashi is a little bit laggy, but then it's sort of like it gives you the basic impression, the feel of the market, so to speak. As you can see here, you can see there's a lot of uh, pulls up and down here. So they're consolidating here, as you can see here also. Yeah, so I try not to make this video too long, actually. Too much information compressed into one. So you can, if you're planning to start a new trading, trying to be a new trader, try out the paper trading first. Don't try the money as people will say, just throw some money in and you either make them or lose them. You most probably will be losing them, in my opinion. So try paper trading first. Do not waste hard-earned money on trading the real market. Like and subscribe my channel and wait for the next video to come out. Thank you. Good evening, everyone. This is another video about three simple things that most people would do wrongly when they are doing their trades. What is the most important trades element that you think of? Is it the cut loss or is it the chasing after the trend? Most people will chase after trends, which is can be dangerous. If you look at this, if you buy in somewhere here and it goes all the way up here, you're doing well, right? But then if you're trying to chase your trend somewhere in the middle or somewhere, just like this one, if you think the trend is going upwards and you try to buy in somewhere here, you sort of like make the mistake that you are quite far away from the 200 EMA. So if you're trying to enter here and trying to enter here, you are more likely to be successful when it is nearer to the EMA. The bounce will be greater and than somewhere so far away from the EMA. So this is one of the main characteristic of trying to chase a trend. Avoid chasing trends. Always buy when there's a pullback instead of chasing trends. Chasing trends does work, but then the risk is higher. So we try to minimize the risk. So if you really want to play the chase the trend kind of play, just make sure you have a trailing stop loss so that and follow the trailing stop loss tightly. Do not just put a stop loss, then when it goes down and you think, oh, okay, it's coming down, so I'm going to not going to invest trade anymore. I'm going to turn into an investor now and wait for the longer term. So there's a recipe for disaster, in fact. So the second thing that most people make mistake of is whenever they see there's a you are trying to buy in somewhere far from the 200 EMA, just like what I said just now, just like here, you try to buy in somewhere here. It does work sometimes, but then the risk will be higher, a lot higher, in fact. And most people that the traders won't really look at is the where the support and resistance area are. Just like here, there's a strong support area, support turn resistance, and resistance turn back into support area here. So if you're trying to buy somewhere near these areas, it can be quite dangerous actually. Just like here, if you buy in somewhere here and then it flops, just it went up a little bit and then flops down all the way down here. So you're most probably will take a loss here. So do not try to do these kind of things. Another thing that you have to pay attention is that most people try to over diversify their portfolios by too much. If you have a 100,000, maybe $100,000 account, try to keep it to about one or two stocks. Do not aim for 20, 30, 40 stocks. Those are too over diversified that you won't even know what to do when when suddenly there's a market crash or something, you won't know how to react to it in time. So most probably you will be, oh, okay, I'm still getting dividend, and the market is down, I'm losing money, and I don't even know what to do. So do not try to do that kind of thing. Do not over diversify. If you have 100,000, 50,000 on each stocks, that is good enough. So you don't have to sort of like split your attention too much. Uh, does it make things quite risky if you're trading just two stocks? Not really, actually. All you have to do is just follow the rules of the game. If it's wrong, just cut and sell. Do not hold. Most people, most losses that people suffer while trading is not from the initial pullback of the stock. It is the long term, slow grinding move downwards that people keep averaging down and averaging down and averaging down all the way down. And the pressure from it is going to kill you. Do not average down or try to hold the stop while it goes down. You might think that, oh, the 12-day EMA is pointing upwards. It has just overshot a bit and it's pulling down backwards. So you don't even know how deep it can be. It can just like here, it can just go all the way down here and gives you another hope you will buy in more here and then crash down. So you're gonna hold a very big loss here. Another thing is, if a stock, because I'm trading mostly on technical analysis basis, the charting style, I don't really pay attention much to the fundamentals of the stock. So if there is news about the company's management with shoddy accounting problems and stuff like that, whenever there's some kind of problem with their accounts, always exit the stock. The stock will crash down, and bad accounting is not a good thing for the company. So the stock will crash. Always exit it. What else do I have to tell? Okay. Another thing is, make sure you know where the simplest thing. In fact, just like if you plan to buy on the way upwards, always make sure that all the lows are going higher and higher and higher and higher, just like this. So whenever there's a lower high here, just pay attention, because it might crash down, or it might just like this one goes up to create two small lower highs. So when people sort of like follow by the book, you see that, oh, this is a high, it has made a lower low, and then two lower highs. So they expect, oh, okay, this one is going to crash down soon, but then they trick everyone and start going upwards. So this kind of thing happens. So and one way to avoid these kind of things is, whenever they see there's a lower highs and a lower lows and two lower highs like this, just wait and see. Do not enter on any side. Only when there's a strong breakout like this one. This is a very strong level. You see, there's three area here. This is a failed breakout. So this area, this zone here, is a very strong zone. So if it breaks up like this is a very strong uptrend move. So you can just either, if you are chasing the trend kind of or we call it tribes. If you're chasing the trend kind of tribes, then wait for a pullback or just go up here. But then I don't think so. I prefer to for a pullback, but this pullback is too shallow. I prefer it to go deeper. Somewhere here would be nice. Somewhere to the previous highs, then another bounce up. But then we won't know how far this thing goes. In my opinion, I won't be chasing it if it's just like this. It might just pull back and then crash down. Because if I'm not mistaken, it should have a pullback soon. So this can be risky. As you can see here, see all this zones is it won't be going up too far away from the pullback area. So this might be having a pullback soon, I hope. So this is gold. So if anyone interested in playing gold, wait for it to go down maybe deeper somewhere here or somewhere here. That's where the zone is. So whenever it goes back here, do not buy immediately. This is one of the things. Do not buy immediately when you see it goes into this zone. Wait for it to consolidate and show you where the momentum goes to. If it breaks out strongly upwards, there is strong probability that it will continue going upwards. If it breaks down, it might sound signal something is bad is coming up. So with this, I think I'll just end the video. Hope everyone have a good weekend. Thank you. Good evening, everyone. Do you know that you can grow your small account all the way up into a fairly big account by doing these simple steps? These are very, very simple strategy that a lot of people are just ignoring it. This is very, very important for small account holders. Firstly, I'll talk about diversification later on, which a lot of people make mistake, especially when you are a small trader. A lot of people think that you need to diversify too much, a lot. The more, the better. But that is wrong. I'll talk about it later in maybe in another clip. But right now, let's talk about how do you grow a small account into a considerably bigger size account. So let's get into it. So this is Dow Jones Industrial Average. So we don't really look at what kind of index this is. Just imagine this is a stock chart that you can see every day in any other stocks. Just imagine this is a stock chart and it goes all the way up like this, and it's on a uptrend, as you can see from here to here, all the higher highs and lower highs. So this pullback over here, as you can see here, you can see all these small candles. All these small candles actually signify that there is a support in this area. So as you can see, all these are support areas. So when you see support areas and you are above the 200-day EMA, when you sort of like see a strong candle going upwards, that means there is momentum onwards. When you see momentum starts building up, you can sort of like initiate a buy position here and just wait for it to go all the way up. So let's imagine this is a daily chart. So just imagine you buy in here. You always set your stop loss somewhere below this candle or at a lower wick. So and then just wait for it. It will either go up or down. And in this case, if it's go sideways and hit your stop loss, then might just exceed it with a small loss. If it goes up, just hold it all the way up until you can see here the momentum starts slowing down. As you can see, the chart here, all the momentum starts slowing down here. You can see the candle sort of like growing smaller, and then it pulls back again. So around here, you just sell it out, and then it goes down. Momentum slows down, and then you can go back in again. There's no problem with that. Just make sure you don't hold any losses. The more you hold, the more dangerous it will be, because most people are ruined by holding on to their losses. You should cut your losses quick. As a professional trader, the main problem we sort of like worries about is how much losses are you going to take on board. We are not worried about how much profit is the losses, the risk involved. So the less the risk, the better it is. So as you can see here in this chart, you have the double top here, and then if you are a short seller here, you can see the double top means there's a strong resistance here, and then it turns into the momentum slows down and going down, and you go enter here. Then somewhere here you might have exited, and then again the momentum weakens and you re-enter it again here with your stop loss somewhere around here, so it didn't hit your stop loss yet, and you will just continue, and this time you're making a very big money by going in here and then exiting somewhere here. So imagine this, the same kind of chart that you're trading on a daily basis. You do it in a 30-minute chart or 1 hourly chart. It's the same actually, just the volatility is a little bit more. As you can see now is below the 200 EMA for this is a 30-minute chart. So this is the previous on the way up. So just imagine here any pullbacks, and you saw a momentum going strong here, piercing above the 9-day EMA. So when you enter here, you hold it all the way here, then exit a few hundred points in this Dow Jones index. Then another pullback, you exit, re-enter here, and then goes up. So it's like riding a wave all the way up. You can either do this kind of a trade in a smaller time frames, or you do it higher time frame, either the daily chart or the weekly chart. There's no permanent restriction on what you want to trade. So let's see the SPY trade now. SPY trade shows that well, if you hear a car going by, yeah, I live next to a big road here, so that's unavoidable, unfortunately. This is already at 11 p.m. and cars are still passing by like that. So oh, this is nice. Hang Seng Index. As you can see here, it has gone above the 200 EMA. So, but then do not enter when the momentum is already on the run. You may follow the trend, try to enter here, but the risk is high. For me, I'll prefer a pullback first. A pullback somewhere to the 200 EMA, consolidate a little bit maybe, and then rebound up. This is what the ideal entry for me. But then you can enter here. In fact, you can follow here, enter, and just keep your stop loss trailing to avoid any losses. Risk is higher here when you enter when it's already on the move. I prefer a pullback, and then just like something like this, it's gone up, then surely there will be a pullback here, consolidate for a few days, and then shoots up again. So I'm waiting for this kind of setup. So if you want to grow your account fast and grow it in a safe manner, you can try doing this also. Whenever you see the stocks goes up above the 200 EMA, pulls back somewhere near or below it or above it, then when there's a momentum going up once again, it's more likely that it's going to be a uptrend soon. As you can see here, all the way from August 2021, or this weekly chart. So from here, 2021 all the way to it only breaks it in October 2024. So 3 years time it is under 200-day EMA. When it breaks out from here and you are trying to enter here, it's a very good shot actually. It might go all the way up to 30,000 and retest the high here. But then I'm sure there will be pullbacks first for a couple of months before going testing the 28,000 plus level here. As you can see, there's also a resistance area here. So you should test this one first before testing the higher 30,000 plus area. So this is a very simple method actually. Just wait for the pullbacks. Once you are above this 200 EMA, make sure if possible, make sure the EMA is curling upwards, heading towards upwards. Do not buy when the EMA is going downwards and the EMA is here and the price is somehow far down here and you're trying to catch a pullback to the mean, which is kind of dangerous. In my opinion, it is dangerous. But then some traders actually manage to make big money out of it, just like BNF, Takashi Kotegawa. He can actually make just like this one. Okay, I invert this chart. I believe it's somewhere here. How do you invert the chart already? I forgot. And then I will find a downtrend chart. Okay, just imagine this one. If Takashi Kotegawa was to trade this kind of charts, let's see. Oh, this is uptrend only. Let's find Bitcoin. Bitcoin might have okay. Bitcoin. Let's see this kind. What BNF did was just imagine we inverse this chart. Let's see if I can find the inverse button. Where is the inverse button? Okay, I think it's here. Okay, invert scale. So this is the same chart that I put it upside down, the inverted version. So what Takashi Kotegawa did, BNF did was he waits for a very strong pullback like this kind. When it's a very strong pullback all the way down here, and there's a big gap here, as you can see. The gap between the price and the 200 EMA is big. So he'll try to wait for a slow on momentum. As you can see here, the momentum slows down. He will try to enter here. When he enters here and he's betting that the market will return to the mean, as you can see, it did not fully return here, but when the momentum slows, he will have exited here. And then when it goes back down, he noticed that the gap is still around. So most probably he will try to retake another position here when the momentum slows down. Or here, he might have lost some money if he tried to enter here. But this one, when it enters here and he holds it all the way here, he does make a lot of money doing this kind of trades. So this is what BNF does when the price is far from the mean, too far. He'll wait for momentum to slow down, then buys in and goes all the way up back to the mean. He'll ride the price up. This is quite a contrarian trade. So what I'm doing, however, just like the CIS ways, not BNF. CIS is the opposite of BNF method. CIS waits for prices to be above the 200 EMA, and then when the price is going upwards, he'll wait for it to make a pullback first, make a strong pullback or something like that. Strong pullback, and then when the momentum slows, he'll just enter and continue right all the way up. He might use the 25-day EMA, if I'm not mistaken. So instead of this white line, which is 9 EMA, he would have used a 25-day EMA, which is somewhere here, and he'll just ride it all the way up. So it won't get stopped out by this kind of trade. All this he won't get stopped out. Almost probably 25-day EMA is going down all the way down. Okay, so this is one of the more important trading method that I know is making money. So you can try it out. I do have another one that uses trend lines, just the trend line and the 200-day EMA. That's all. We try to keep our charts simple. Do not overcomplicate things. the more complicated it is, the more uh, confused you are when something happens and you're trying to take a trade or cut off the trade or the loss. So the more confused you are, the more likely you will lose money. So subscribe my channel, like, and then share it out. And most importantly, you can check back my previous videos or my short videos. Let me know if there's any stock that you want me to take a look at, or an index or anything. So thanks. Goodbye.